going back to prices, hardly anyone got the plunge in gold from 19 to 1200 right, or the extended bear market in Japan. Are there times when you've been caught high and dry in your own investment choices, and how do you deal with these situations?
It depends on your thinking, really, doesn't it? Yeah, I mean, everyone is, I'm sure, has always, got various investment calls wrong. It depends on the reason why your call is wrong and whether you think fundamentally the situation should be mean reverting. As a fundamental analyst, I think that almost everything should be mean reverting. There are situations, however, in which company share prices don't mean revert, and all you can do is analyse well, there are two things. If you're a chartist, you can read the charts and decide that you think it's going up, going down, and sometimes down means it'll go further down, sometimes up means further up. From my perspective, I have to ask myself, is this going to revert to the historical mean, or are we in a new paradigm? And I do that analysis to the best I can, come to the conclusion, then act accordingly. If I think the answer is we're in a new paradigm and it could go down further, then the obvious thing to do is to sell your position. If, on the other hand, you think that actually things are fundamentally the same, then you'll want to hold on to your position, and if you're feeling brave, then you can always double up.
Why do you think so many people miss that slump?
I think I would quote Yogi Berra and say that predictions are very difficult to make, especially when they're about the future. And I think the whole world actually has quite a poor record of predicting the future, and I don't think financial analysts are any different in that respect. We do the best we can, but we must recognise the limitations of our craft. I suppose I could paraphrase Maynard Keynes there and say that it could be a case sometimes that the markets can stay irrational for longer than you can stay solvent, and we see that very frequently. It's the madness of crowds, if you like. Newton said a similar thing. I can predict the motions of the heavenly planets, but I can't predict the madness of crowds. When he lost a fortune in the South Sea bubble. So actually, I suppose what it shows is that very clever people also are not necessarily any better predicting the future than anybody else. And there's a certain amount of politics in predicting the future. And there's a certain amount of understanding people and herd instinct, I think, as well. So it's an easy thing to get wrong. As I say, we do our best.
That sounds like sage advice from someone who's been there and got the t-shirt. What's sort of one or two very memorable occasions that you've had in your sort of your area of expertise? Are there any standouts?
Well, it wasn't a good experience, but it was one that told me a lot, was Bre-X. I don't know if you remember Bre-X in the late 1990s, but and it was a miserable time for gold investing. And there was this one company in East Kalimantan, Canadian listed, and they claimed ever greater amounts of gold in the ground. It was an exploration company, but they had tens or even hundreds of millions of ounces in the ground. And in the end, it became the object of a takeover. It was a friendly takeover, and it was Freeport McMoran was going to take it over, and so they were doing their due diligence, and they worked out that something was up. They called a geologist into a meeting, and the geologist took off in a helicopter and never arrived, and basically the whole thing was exposed as a fraud. Not only was there not tens or hundreds of millions of ounces there apparently was absolutely zero there. And I remember it brought home very clearly to me, and what's the old Mark Twain saying, a gold mine is a hole in the ground with a liar at the top. But there was that, and then you had to, and then, this is a stock that went up, tens or hundreds of times, because it went up 10 or 100 times, and then they had a stock split, and then it went up another 10 or 100 times. So it gave an extraordinary return both on the upside and on the downside, and I suppose it was a vivid illustration of the madness of crowds and the fact that large parts of the investment community didn't question it, and some of those who did question it were were sort of shut up by that. It was very difficult. It was very difficult to express a dissenting voice. Is what I remember, and so, if you like, there was only one argument which became the orthodox argument, was this was a good thing and you should buy it and continue to buy it. And so, there was this exploration company which was worth more than huge companies that were in production. It was worth more than goldfields of South Africa at the time, for example. And that is something against which investors also need to benchmark themselves, actually. When is the hubris getting too great? What is it actually discounting relative to, because not only was this highly valued because it had lots of ounces, but each of their ounces were very highly valued as well. And was that valid? And to be honest, it's easy to look back and say it wasn't, but it should have been something that investors probably should have questioned even before it got to the point when it was established to be a fraud. And I suppose the final thing that I'd observe is the hour is always darkest before the dawn, and I just remember the feeling in the market in 2000, 2001, where junior exploration companies were saying, well, we'll forget all about this mining, and we'll change our name to enorth.com or something, and look for opportunities in the internet market, and the share price would go up just on that announcement alone. And so, yes, the hour is darkest before. That was a fantastic time to invest. The best returns in the sector were to be made 2001 to 2007. And that was a time when you wanted to be in the market in the early stages of the cycle. Much better returns than 2009 to 2012.
Do you see a big upturn soon, or is it stability now for the next few years?
It's hard to see what will catalyse a big upturn in mining, I think, but that's not to say that there won't be one. It just means it's difficult to see. Everyone will be very good at recognising it with hindsight, but the thing you need to do is position yourself for that possibility beforehand. I think it was, as the Queen said, when talking about the financial crisis, well, how was it no one saw it coming? And almost nobody did see it coming, and a few people will backrash. There were a few people who said there will be a crisis, but had been saying that for the last 10 years. There was almost no one who had been saying everything's fine, everything's fine, everything's fine, no, there's going to be a crisis, and were proved to be right. And that's where your asset allocation is, because you have to be, or you want to be, positioned for that sort of possibility, or you want to know what your plan B or contingency is if you see a sharp change coming quickly, or you realise you're experiencing a sharp change, you want to react to that quickly. If you have to stop and think, what am I going to do now? It's too late if you don't already have a plan in place.